Welcome, folks who are just signing on. Thank you so much for being here today. We're going to wait just a few more minutes, let as many folks sign on as possible, and we'll get started with Matt Waters and Brian Sinclair. Thank you so much. Folks who are just joining us, thank you so much for being here. We're so glad to have you. We're going to let the rest of our registrations take another minute to log on, and we'll get started around 1:31. Thank you so much. All right, everyone, thank you so much for joining us today for Why Lease Accounting Systems Fail. We have Matt Waters with CoStar Real Estate Manager here and Brian Sinclair with RGP here to tell you all about why so many companies are replacing inadequate ASC 842 software. I'll let Matt take it from here.
All right, thank you, Laura, and welcome everybody to the webinar today. Again, it's about why lease accounting systems fail, and we're going to talk about 9 reasons today. And don't worry, we'll go through them rather quickly. The 9 main reasons we see companies replacing their lease accounting software. And as Laura mentioned, my name is Matt Waters, and I'm a CPA. For about the past 8 years, I've worked at CoStar Real Estate Manager, helping literally now over 1,000 customers go live with new lease accounting software, automating lease administration and lease accounting. At CoStar Real Estate Manager, we have a software solution for that. So, of course, that's what we're going to be talking through today. We also, as you can see from my video, we have conference rooms with extremely bright spotlights. So sorry about the video, but hey, we're here to talk about accounting. So prior to working at CoStar Real Estate Manager, I worked at the Home Depot, where I led the lease accounting team for about 6 years. And I also worked at American Tower, which is the world's largest tower-related REIT, real estate investment trust, and there we had hundreds of thousands of leases related to the towers. So all in all, been around lease accounting for over 15 years, and happy to share some of that experience with you all today. And I'm also really happy that Brian Sinclair has joined us, and I won't steal his thunder on the introduction, but I'll just say we've really enjoyed a alliance partnership with RGP and with Brian in particular, and so pleased, Brian, to have you today, and I'll let you introduce yourself.
Great, thank you, Matt. As it reads there on the screen, I'm currently leading RGP's technical accounting solution practice. And within that practice is our Lease Accounting Center of Excellence, and we've delivered on hundreds of implementations and adoptions of 842 and IFRS 16, with CoStar being one of our leading partners, alliance partners within the lease accounting software world. Definitely one of our best partners that we've worked with, and I'm excited to talk with you all and work with Matt again.
All right. Thank you, Brian. So what we're going to talk about in general today is just the common scenario of what companies expected to happen when they shifted over to ASC 842 or IFRS 16. They expected predominantly, to go from a manual spreadsheet based lease accounting scenario, a process at their company, through this initial adoption into a post-adoption scenario, which all companies should be there now, right? Public companies back in 2019, non-public companies sometime after that, but but by now, non-public and public companies should be live with the new accounting standards. And they expected, and I'd say rightfully so, they expected to have an automated solution. But what ended up happening was that a lot of companies were able to calculate their initial balances. In other words, the initial adoption event was calculated in a software and looked good. But then switching to the next slide, what we have seen in the marketplace is that a lot of lease accounting solutions were underdeveloped, and so they were basically purpose built for a transition, the initial event where you put lease liabilities and right of use assets on your balance sheets. But then when it got into the day-to-day operations of lease administration, lease accounting, procuring equipment and real estate departments, going through their normal course of business, acquiring real estate leases, new assets, and then also remeasuring those when things change. The many companies have found that dependencies were forced that put them right back into Excel, which is of course not the ideal scenario. And so for that reason, at CoStar Real Estate Manager now, we've been extremely busy with replacing lease accounting software, that people bought just a few years ago. But it makes good business sense when you really think about it, and think about a concept we all probably learned about in our management classes in college, right? The idea of sunk cost. I mean, yeah, you went through a big project, you bought software, but that's in the past, right? It's sunk cost. Now you got to think about the scenario going forward, and consider how much you want to prop up a underperforming software, with spreadsheets, or if you want to learn from the experience and then implement a new software now that can take you into the future. So what we've seen lately is that a lot of companies are making that leap, and the ROI is there. And we'll talk about the 9 main reasons today. I think, Brian, the next slide is from your perspective, as far as the root causes of project failures.
Yes, Matt. These are all common root causes that we've incurred over the past several years around why did the solution not work. And some there's a little bit of crossover, but sometimes it was just there was decisions based purely on price, or they were very limited amount of time to implement in order to comply with the initial standard. So they forced through their implementation, and they didn't really spend time on the configuration, or it really just was never a good fit. And so that's really kind of driving companies to reevaluate their current solutions, because kind of going back to that previous slide, because they've been an inadequate or underdeveloped solution, they've gone back to relying heavily on spreadsheets again. And it's not a good overall solution. Again, mentioning buyers are just under the gun. It was the adoption period. It was there was a lot that had to take place. Just the collection of all the leases, and time became very short in order to get their solutions in place. And again, shortcuts were unfortunately may have been made, and they're just in a bad place. Lack of input from the outside beyond accounting. For a lot of our clients, especially and maybe they may not have included their real estate team, or they didn't include the FP&A or the treasury team. And so we have an accounting solution that's working great, maybe for the accounting, but from a lease admin perspective, it's not been so well accepted. And so really looking for a more comprehensive solution like a CoStar that handles both the administration as well as the accounting seamlessly is again, a solution that resolves that issue. I think some of those others are probably fairly almost expected. Not really thinking about future changes in the business, where we're seeing that fairly often now. Originally they acquired a solution that today doesn't really meet their needs. They've expanded. They may have moved beyond just the U.S. borders. Now have operating businesses and leases outside of the U.S. and their current solution doesn't handle those very well. And so again, that kind of forces them to use spreadsheets and manual workarounds in order to get the reporting that they need. But it's also, that means it's a lot of time wasted. Another aspect is integrations. They didn't think about, when we get to day two, how best to utilize the solution they have in place, and they find out that the solution they acquired doesn't integrate to their ERP. And so they can't automate. They can't reduce the amount of time that they're spending posting journal entries and helping out with getting through the various reconciliations. So again, just sort of some thoughts that areas where these have been resulting of failures and why they're moving on and looking at other solutions.
Yeah, thank you, Brian. And one other that's not on the screen here that I thought I would mention, it's kind of something that started to develop more recently over the past year or two. Some of the solutions that were first used now, due to just consolidation in the industry, because a lot of their companies, the lease accounting software companies, were kind of venture capital based or backed, and some people developed solutions that were intended to be temporary and then sold off or consolidated and that kind of thing. That's just what happens in that space, I guess, a lot of times. So some companies, they selected a software thinking that it would meet their needs long term, and then there was some change completely outside of their control, that is now motivating them, and kind of involuntarily being thrust into a totally different environment and customer service landscape, that kind of thing. And so that's another thing that we've seen recently develop as the kind of the lease accounting software industry consolidates post adoption. All right, we'll get right into the first of our 9 reasons that companies replace lease accounting software, and that has to do with no audit details in reports. And so I'll just give you 2 examples here. The most common ones that we hear people talking about are disclosure reports and roll forward reports. Auditors, of course, ask for these. And the disclosure report is actually a requirement, for compliance with GAAP. The roll forward report is simply a extremely common auditor request. And what we found, we have meetings with people when companies decide to replace their software. We ask them, in the beginning in discovery meetings, hey, why? What are you missing? And this one consistently pops up. The software that they chose initially perhaps has a disclosure report, or maybe even both disclosure and roll forward, but they don't provide the audit support that the company really needs, and so they're back in spreadsheets when it comes audit time. And so here's just a quick example, kind of a truncated roll forward report. that is quite useful. And in CoStar, this will run in a matter of seconds, and literally, at both of the large companies I used to work at, Home Depot, for example, this would take days to prepare, because we'd have to run various reports from different systems, cobble them together in Excel with VLOOKUPs and pivot tables, and ultimately, kind of cross our fingers and hope that nothing changes, and then give it to the auditors. And so it took days for my team to work on something like this for, a company that size. Now it runs so quickly, a matter of seconds. I mentioned, a lot of our customers are using this on a monthly basis, not just at year end, but they'll run the roll forward report every single month, to support their balance sheet reconciliation process. So there's just a vast improvement, from manual processes, for sure. And then what we're finding out, it's the automation and the reporting that we offer for this, is leading the market, for lease accounting software too. Brian, any stories that you have on this one?
Oh yeah, I just think about, anyone who has had to work with auditors, getting through the audit, so much is going to be dependent upon the credibility of the information you provide. And so the ability to provide complete and accurate reports, such as the roll forward reports and the disclosure reports that tie out, it gives a lot of credibility and comfort to the auditors. That keeps them from having to, expand procedures or go through additional audit work, and it saves time and money. So these types of reports are invaluable, again, I think, to getting through a successful audit, and having a solution that's able to produce these is key.
Yeah, for sure. I mean, we all love our colleagues that work in audit, and my brother is one of them. He's a CPA as well, is an auditor. Great people. But when they're looking at my work, I want to spend as little time as possible having to explain things. So that's what we're trying to do at CoStar, is help you save that time during audit. The next reason that we hear about companies replacing software is no ad hoc reporting flexibility. And so this one, kind of goes into that same vein of time savings. I remember, many times getting requests, and typically be 5 o'clock on a Friday, right? Hey, the controller needs this, the CFO needs this, our financial planning team needs this, and it relates to a new strategic decision or something that involves leases, and they would need and it's always called, right, can you do a quick report? But hey, if you don't have drag and drop drag and drop report writing flexibility, you can't really create a quick report. You're right back into that, Excel, jockeying spreadsheets around kind of scenario that we all know takes longer than anybody expects it to. But when companies switch over to CoStar, they tell us they're switching from their previous lease accounting solution to pick up all the standard reports that you see listed here. And there are actually many more. This just is the main ones that we can fit on a slide. But also to get this true drag and drop ad hoc reporting flexibility, where quite literally every field in CoStar, either lease administration or accounting, can be just dragged over into a box, and then you set your parameters on the screen and hit run, and you have a report that is of course custom built to your specifications on the spot. It just saves so much time. You don't have to be a power user to have this. Every single user in CoStar Real Estate Manager has this ability, And you certainly don't have to log a ticket, to have a custom report created when you need something. You can just create it yourself on the fly. So that's another reason why people switch. Brian, anything on this one?
Yeah, I think the tremendous inventory of standard reports, in which I think probably gets, the vast majority, probably 90% or more of what people are looking for in terms of their reporting needs around lease accounting from CoStar. But the ad hoc reporting, we've all had those requests, from a business unit or cost center that it's requested in a certain format. And so again, that the drag and drop is so easy, and being able to save and rerun it without having to recreate it is a really good advantage and great functionality to have at your fingertips.
Yeah, absolutely. And I'll just mention to the audience, if you have any questions, there's a Q&A function in Zoom, and you feel free to type them in, and then we'll get to them, as many as we can, at least as we go through or at the end. So just wanted to call that out. Feel free to ask away. All right, moving on through the third reason that we hear is no accounting policy compliance checks or validation of lease data. And so, I mean, I know that's a kind of a long title for this section, but basically what this gets into, in the heart of this, is helping you to sleep better at night. Because what we've done with CoStar Real Estate Manager is we've built in policy checks and validation of data, so you don't get into the situation that we hear many of our newest customers saying, in our old software, it was a garbage in, garbage out kind of scenario. We never knew if it was right or not, right? And so that's not the case with CoStar. What we give you the ability to do, both for manual entries and for bulk uploads, is we give you the ability to enter them and then review any alerts that the system generates. Now, if everything is fine, the system will just accept the upload, and but if lines of the upload appear to have some some policy violations or something that's incomplete, then we will alert you through the software automatically. And so you have a bit of an example of this on the next slide here. You can see one of the screens that'll pop up for an upload that everything has passed. You can see the green, validation test passed, successfully validated. And so basically what this gets into, and we don't have time to give you every example, of the alerts that can be generated, or reports that can be run, but basically all of this boils down to just peace of mind. And if you're thinking about, well, how much of the from a manager's perspective, how much of the work that my team does can I possibly double check? No, I mean, we're not trying to replace a review. I mean, I think that's always a part of a healthy accounting department, right? Is the first a self-review, of your own work, and then levels of review after that, all the way up, through the organization, and then including internal, external audit, right? But I think what this does is just gives more assurance, helps a manager, for example, rest assured that, while they were able to check dozens of data points, perhaps, that they are trained and, and experienced in looking for, the system behind the scenes is checking dozens and dozens and dozens of other check figures to make sure that it's accurate. So again, it's a peace of mind, help you sleep better at night functionality that a lot of companies are switching over to CoStar to pick up this functionality. Brian?
Yeah, I think for the audience to understand, that being a policy-driven solution like CoStar, what that really means is that you've got a lot of that policy data as part of your master data that validates it. So you're entering new leases, you're not having to necessarily come up on an individual lease by lease information, such as the IBR. And we've seen these errors occur with some of our clients on other systems where they're having to input individual IBRs for every lease, and there's not consistency, and it's resulted in errors because there's not a validation, it's not policy driven. And again, I get back to sort of this audit aspect, being able to have audit quality data, information reports is such a huge advantage. And the ability to reduce the errors and not have to just hope that the accounting is correct. Having these validations really gives you a lot of that assurance.
Yeah, absolutely. Yeah, that IBR or incremental borrowing rate, I mean, it's needed for basically every single lease. And yeah, you're dead on with that. We've heard some horror stories around not having the proper system controls around that. All right, so moving on to the next one, no automatic remeasurements. So this really is at the core of what we do in lease accounting. Because again, putting the leases on the balance sheet the first time was a hard task. However, that's not the only time, right? I mean, leases change constantly, and so you have terminations, you have renewals, you have partial terminations, impairments. The right of use asset is subject to impairment testing, just like fixed assets, and the list can go on and on. You hear about abandonments, and real estate rationalization programs. We could keep talking about all the different examples, but just the overall fact is they're quickly after initial adoption, as I'm sure all of you on the call have discovered, quickly this ongoing maintenance of leases overshadows that initial compliance exercise. So and what we're finding out is that a lot of software solutions again just baked in functionality to get companies through initial compliance, gross up the balance sheet, but they don't have the robust functionality for all these different types of remeasurements, and practically every one of these, the examples I just named off, has a different path according to accounting guidance. And so at CoStar we have all of those different types of remeasurements, with a selection you can make. The remeasurement is processed in line, in the same amortization schedule for lease accounting. The remeasurement is processed in line, and what we're finding out, people that are switching over to CoStar say, well, in our old software, we had to create a brand new amortization schedule, or sometimes they even had to create a brand new lease entirely before they could get the new calculations. And even then, sometimes they were not quite accurate. So we definitely developed the software with this go forward environment in mind, and all of these different types of remeasurement events. And we stay in contact very closely with people like Brian in technical accounting, and who advise us when our software, when there's some new scenario or some new development in the accounting practice that the software should address. And then, of course, we are able to work that in through enhancements. And so again, we're basically just always constantly making sure that our customers have the tools they need for all these types of scenarios as they come up in the course of business. Brian?
Yeah, well, we recently had a conversation with a company that they disclosed to us that they did have some significant deficiency around their lease accounting processes. And a lot of it came to light that it was run remeasurements. And it was exactly that. the solution they were using. They end up using an incorrect IBR because of how the solution was designed, and it was more than one remeasurement. So it was, they were lucky, right? Being a public company, it could have risen to the level of being a material weakness. It didn't for them, but it was still a significant issue, nonetheless, a significant deficiency. And so the remeasurements, this is where we do see, potential for a lot of errors. Same thing with spreadsheets. You mentioned out there when performing, with a spreadsheet, that does take a lot of, its own set of calculations, and that's just not something that you want to shortchange and not have a well-designed, well-controlled lease accounting solution like CoStar to help you through that.
Yeah, for sure. And then the next one actually ties very closely into this. I'm going to move into it very quickly. Automatic retrospective true ups. I'd say most lease accounting software has not put in the time to develop this functionality that CoStar has. And basically what this means is that when the accounting team finds out something late, which, hey, we all know this happens every month in close. There's something, you try to get everything in, before the end of the close process. But inevitably you're going to find out about something late. A lease agreement was signed and it was in, on somebody's desk out in the region or whatever it is. You end up finding next month about this change that technically occurred in a month that has already been closed from an accounting standpoint. So what happens then is, manually what happens is you get out Excel, you calculate what should have been booked, you import in or type in what actually was booked, in debits and credits, and then you take the difference of those two and you book a true up entry, and all that is manual. And frankly, that's what's happening in almost every functionality. But CoStar does have that, and so we're getting a lot of our new customers say they're switching over to get functionality for this, where again, in line, in the same amortization schedule that you're already looking at, when you process a backdated adjustment, the system will automatically recognize, oh, this adjustment takes place in an accounting period that has been closed. And so then the system will automatically calculate the retrospective true up. And you can see that just kind of presented here on the screen, the original schedule, the remeasured schedule, in other words, the way it should be, and then the retro schedule, which shows you the difference in the two, and then ultimately gives you a true up journal entry automatically. So it saves a ton of time, A, and B, it gives you the record of this true up entry right there in CoStar. So you don't have to, just kind of to Brian's previous point, you don't have to continuously save Excel work papers, documenting your manual journal entries anymore. You just process the true ups automatically in CoStar. Brian?
Yeah, no, we work with a lot of clients that really do want to reduce their close, and a lot of those processes around reducing time to close, comes around how do you deal with potential for immaterial out of period adjustments. This way, you still close your books, you close your periods. And the beautiful thing with the CoStar is that it does book those out of period adjustments and the catch ups, and you keep moving forward. To me, that's a crucial tool When you look at, again, when you're trying to improve the overall closing process and go to a faster close, or having tools like CoStar that has this kind of capability to do those retrospective true ups.
Yeah, huge savings of time on this one. And the next reason we'll talk about is no flexibility to split amortization schedules. And so this one that's really came up in the very beginning of the new lease accounting standards. Most of the time, companies would request to split out tenant improvement allowance schedules because it's a common book tax difference. TIA, as it's commonly called, it's an adjustment to the right of use asset according to ASC 842, but for tax purposes, it's not counted. And so it's a common request that the tax department will come around, once a year, long enough in between that you forget how to do it, right? They'll come around and say, hey, how much of the right of use asset is related to tenant improvement allowances or TIA? And so with CoStar, what you can do is, here's an example on the next screen. You can split that into a separate but parallel accounting schedule. You can see the tab at the top right. It would be the main accounting schedule for ASC 842 for this lease. And then the portion of the right of use asset that's related to TIA is presented in the schedule on the left. And it's, I say separate but parallel because it's all right there together. And actually the journal entries for this lease will incorporate both the reporting, disclosure report, roll forward, all of those standard reports that we talked about will include this and with the right of use asset. For all of your reporting. But hey, when you need to run a separate report for the tax team, and you could even do this with the ad hoc tool that we talked about earlier, you could just run every single balance, the current balance related to TIA and say, here you go, and it takes you a matter of minutes, instead of trying to think through, oh man, what was my opening balance of right of use asset? What part of that was TIA? How many months has it been? Straight line amortization, it just takes so much, thought process and horsepower and manual spreadsheet work to do that kind of thing on on something as simple as this. But most software cannot do this. What we have found out, most software restricts you to having one schedule, one amortization schedule per lease. And if you want to have a second schedule, you have to create a new lease. But that doesn't work because it's technically the same lease, right? So people become frustrated with not having this functionality, and so for that reason, it's one of the ones that we hear about in our discovery meetings when we ask, why are you switching over to CoStar? Brian?
We had a conversation just like this last year. The client had already selected a solution and we're well underway with their implementation. And at one point, they involved their tax team, and it was very much the question was, well, what happens to our TIA allowance? Because typically they would get that from the activity out of their ledger. Well, going forward under 842, it's going to be included as part of the right of use asset amortization. And so how do we get that? How do we get the information that we still need for tax return? Because the 842 didn't change the tax compliance. So, it was something where they just basically had to pull into spreadsheets those the TI allowance amortization going forward, rather than having, again, just a single solution. And it's great functionality that CoStar that has for this, because it is a fairly common need to have this kind of information for the tax folks. You see the purchase accounting adjustments, the same thing. Being able to track and identify those on a separate basis that doesn't necessarily always get recorded as its own line item in the general ledger. It's excellent functionality.
Yeah, thanks, Brian, for bringing up purchase accounting too, because yeah, that it's not just for TIA. That's just the most common example. But now I'd say more and more all the time we're finding use cases for this. Purchase accounting with favorable, unfavorable adjustments. In business combinations is one. I've had customers ask in a similar vein in a bankruptcy scenario, really the examples could go on and on, but the point remains, sometimes you want to have two different schedules, so having a software that has that flexibility is super important. Now, I know Brian's going to love this one. No discount rate matching. This is going to get right into that IBR example that you talked about earlier, Brian. But basically, we had this requirement come up early on. I mean, to start with, in the very early days of public company adoption of ASC 842, we offered the ability for companies to upload their buckets of rates, and then choose from a drop down, or type it in manually, but what we found, and that works fine for some people, but what we found that some companies, basically the larger you are, the more and the more diverse as far as geography and different types of leases, the bigger chance you are to have hundreds of rates to choose from, or maybe thousands. And that's because the incremental borrowing rate that's used in lease accounting calculations, it's based on what what you could, to summarize it, what you could go out and get a loan and purchase a very similar asset on a collateralized basis, right? So there can be a lot of variation there based on the country that you're in, the currency, the length of the term, because different loans, of course, a 30-year loan has a different interest rate than a 5-year loan. And then the type of lease too. Real estate typically has different interest rates than vehicles or other equipment. And so this is an example of a customer suggestion at CoStar Real Estate Manager. We have a feature called Suggest Your Idea, and basically our customers are able to log their enhancements in the request for enhancements directly into the software. That goes to the product team, and it's evaluated, as they come in. It's also available for all of our other customers to view, and every customer has the ability to enter a new idea or upvote ones that have in other words, prioritize ones that have already been entered. And now this is really one of the main ways that our product team decides what they're going to work on next. To add to the product roadmap. And discount rate matching is an example of this. So that, we had one large customer to start with say, hey, we don't even like having to choose from a drop-down list, because that's still risky, right? It introduces some chance of error. So what we want is a way to import rates. For example, the treasury team can import the IBR rates once a month or once a quarter, whatever the company's policy is. And once the treasury team does that, the software will then automatically, for every single lease, assign the correct rate based on the company's business rules. And so you can see the example here where it's a 0 to 36-month lease. This just gets into their business rules. It's in US dollars, it's in the United States, and it assigns the proper rate of 5%, with no hands on the keyboard at all. So basically, again, this is a peace of mind functionality and definitely, you know, I've heard examples very similar to the one Brian mentioned where, you know, people say, oh, well, we're switching over to CoStar because we've had some major scares or we've had some misstatements related to IBR. And it makes sense because IBR drives classification testing, you know, among other things. But it drives whether you, in many cases, whether you have a finance or an operating lease. Of course, the treatment on the financial statements is different. So if you get that wrong, your financial statements, P&L and balance sheet are misstated. And then EBITDA will be skewed too, because finance lease expense is in interest and depreciation, and a operating lease expense is rent expense. You know, so one is included in EBITDA and one is excluded, so it can just create a world of problems if this one data point is wrong. And basically what we've done at CoStar is automate that and let you rest assured that it's always right. Brian?
Oh yeah, you know, with the other big advantage here is that, you know, you're able to establish, you know, whatever periodic refresh that you need to do with your rates, and that becomes your control process. And then it's, you know, it's a single update as needed. Some of our clients do it monthly, some are doing quarterly, some are semi-annual and even annual. But that's that one process that you have to go through, rather than when there is that moment or time when you have a new lease or modification or you need to remeasure, you're then not having to hunt down what that is. And it's definitely a much stronger control process and just gives you, you know, again, more consistent, accurate, and complete results.
Yeah. Thank you, Brian. All right, we're on the home stretch now, just a few more. Automatic journal entry integrations with approvals. So some software lacks this, you know, but it's basically now your software needs to have automatic journal entries. I mean, it's kind of table stakes now, I'd say, in the digital transformation era that we're in. You know, I saw a survey the other day that 80% or more of CFOs surveyed said that they're continuing to invest heavily in automation. You know, and that's no surprise. I mean, we see it, but some systems can't integrate with ERPs, and you know, some claim that they can integrate, but then, you know, down the road in the project, they fall down and can't deliver that. And so what does that do? It puts you right back into spreadsheets and, you know, offline, you know, saving offline support for your documentation and audit review and SOX, you know, if that applies. And so again, it really should be a given now that that journal entries are integrated. And so when that fails, many times companies, you know, that's kind of the last straw that has caused companies to switch over to CoStar. And I should mention, we're not, you know, only talking about journal entry integrations. We're also talking about AP history, currency rates, you know, vendor data, you know, master data files, discount rates that we've already talked about. We're talking about AP, AR, you know, financial reporting software like, you know, like Blackline, for example, or maybe a Workiva type integration to, you know, to take, you know, not only get information into CoStar for the beginning of the process, but then export it into the ERP or these other systems for the end of the process. And just having all of this working hand in hand and completely integrated is really a necessity these days. And I did not, you know, intentionally, I did not mention the middle box. These things like lease accounting, lease administration, project management, all of these areas are not integrations at all. All of these are actually part of one solution, CoStar Real Estate Manager. And so this is actually a huge advantage. And we hear about this all the time. People are tired of doing double work. If they bought a purpose-built lease accounting solution, and their lease administration team is still using the old lease administration solution, then there's double data entry taking place because so much of the same information is needed by both teams. And so I just drive that point to say lease accounting and lease administration, in particular, and all of these others apply too, but lease accounting and lease administration are really better together in the same software. And that's what we offer at CoStar. Here's just a sampling of different softwares that we have a lot of experience integrating with. And I have to say, do not worry if you don't see the one that you're thinking in the back of your head right now on this list. Again, it's just a sample. We have quite literally integrated with hundreds of different other solutions. All of the main ERPs certainly included in that. Brian?
Yeah, you mentioned the 80% by the CFOs are interested in automating, and that certainly is what we see in RGP with our clients, is that really the desire to automate processes in the finance and accounting, and really kind of expanding beyond that, and a seamless automation, if you will. And it's still surprising to see the number of solutions out there that don't integrate very well, or very limited integration capability. And so when we're having our discussions with clients about looking at what replacements and/or their desire really to get into automate and get really return, if you will, on what they've invested around lease accounting, lease administration, it's CoStar that we will bring to the table because of their broad capability and deep capability to integrate with so many different solutions.
Yeah, thank you, Brian. And the last main reason here, and then we have a few more slides just to give you some a little better context and action points. The last one, though, the main reason we'll talk about is no ability to add company specific fields. So really this one just gets into the fact that every company is different, and a lot of lease accounting solutions and lease administration software, they're purpose built for transition, but CoStar Real Estate Manager has been around in this space over 20 years, serving the industry long before ASC 842 was even considered. Okay, and so we've built in things like flexible fields that we can add that are specific to your company. And so what does that do to you? That do for you? That helps you stay out of Excel spreadsheets. Again, you can add building details that are perhaps specific to your industry or your company. I think about an example from Home Depot. When I worked there, we had some stores that had a square footage for an appliance mezzanine, and basically it's just a big balcony in a store that customers could climb the stairs and look at more appliances in Home Depot than could otherwise be displayed, because there was basically a second story now just in that section of the store, and it's called an appliance mezzanine. Now, I'd venture to guess that nobody else on this call has a need to track the square footage of an appliance mezzanine, but you might have something unique that you need to track, and CoStar gives you that flexibility to track it in the software. Again, keeping you out of the risky business of maintaining Excel spreadsheets, and thinking of where you store those and how do you keep control over those. Just a few other points here. CoStar also gives you the ability to get inputs into fair market value analysis right in the software. We do this through our parent company, CoStar Group. which has the largest database of commercial real estate information in the world. And we integrate that data for the properties that you occupy, that our customers occupy. We integrate that data into the lease accounting solution. So when those impairment decisions come up, or business combination, favorable and unfavorable type calculations come up, you can have a quick source of information to understand the market that your building is in. Final point in this section, and then I'm going to turn it over to Brian for some thoughts on the actual steps that you would go through to replace the system. But just one more point here about workflow and controls. CoStar lets you, and this really gets back into the company's specific information and flexibility. You can make the decisions about your own control environment. We're not forcing you into how many levels of approval are needed. But we do give you the ability to set up the levels of approval. And you can see, just the quick example, it honestly goes way deeper than this. When our customers go through implementation, they'll set up their rules, but you see the quick example here of how you can set up your preferences and policies around reviewing in your control environment. And Brian, I'll hand it over to you for this section.
Sure. Thanks, Matt. So certainly the process for doing a system replacement is not nearly the same as in the original adoption or original implementation of your solution. The heavy lifting for most implementation was really around the data, and now, since majority of the data will reside in your existing or your legacy lease accounting solution, migrating to CoStar is really one of just validating your design and then looking to the additional functionality that CoStar can provide, and going through a short configuration exercise. The rest of the steps, again, are a little bit more straightforward, because now we're validating data, not so much against our original data loads, but it's really validating back to the legacy solution. And so again, there's a little bit shorter amount of time to get through the process. So what we often find is, again, the level of effort to migrate from an existing solution to CoStar is a fairly is a much faster exercise than an original implementation was, and much more, certainly a focus on the training and making sure that all the additional functionality that CoStar can do for you is well understood, and that you're in a much happier place. And then in terms of the data itself, again, because data is always one of the key components of any migration project. It's extracting that information from the existing legacy solution and doing a mapping exercise. So we map that over to what's needed within CoStar. Again, we'll go through an evaluation. Are there new fields or additional data elements that we want to capture? We'll capture that information, and then we go through the bulk upload process, validate it, and then go through a final overall completeness validation of the load, and then you're ready to go. So again, it's a little bit of a shorter, a little more quicker exercise, if you will, because again, almost all of that data is already existing in your legacy solution.
Yeah, I agree. We hear this over and over, that it's so much easier to transition to CoStar, so much easier than the initial compliance exercise was. And part of that is the data that's organized now in such a way that enables this kind of process. Another part of that is that Brian's team and our team here at CoStar, we've done this so many times now, right? I mean, we're we're even starting to have templates, for this migration process from specific other software vendors, right? So, basically, whatever software you're on right now, chances are we've already replaced, another one of our customers, switching over from that software, and we've already established some templates and experience there. And so that's the end of our time. I really appreciate everybody joining us today. Brian, thank you so much for your support and for lending your wisdom today on the webinar. Really appreciate it. Always good to see you.
Yep, thanks, Matt. Thanks everyone at CoStar.
Have a
If
great
you
day.
want to attend more CoStar webinars, check out our website, costarmanager.com, and have a lovely day. Thank you so much.